Hi everyone. In our last video, spoke about how to identify multibaggers, what is STAM. So now in part two of this series, we are going to talk about management. So we previously discussed about Cera Sanitaryware, how it became a 100 bagger in 1.5 decades. So we spoke about strong leadership as one of the most important trait of a multi-bagger stock. Let's dig in detail about this. So if you look at any management, right? So company's management is very, very important. So they should have the right expertise and domain knowledge to become successful in the field in which they are running a business. That's one thing. The second thing is they should have strong ethics and moral. So even if the management is very smart, it doesn't matter. If they are not ethical, they're not going to help you generate wealth. They're not going to be ethical. They'll basically swindle money away from the listed company. All these things can happen. Number three is their execution capabilities and the way they are solving the problem. Are they able to walk the talk? So these are some of the important traits to look at management. So now let's look at Cera. So the Cera company's management, they've been in this business since 1960. So the Somani family set up their first manufacturing unit in Haryana in 1960. By 1980, Vikram Somani wanted to do something on his own. So he got a license to build a sanitaryware manufacturing unit. So Vikram Somani, the founder of Cera Sanitaryware, is in this business since 1980. So from 2010, it's for 3 decades, 2.5 to 3 decades, he was already in this business. He knew what it would take to run a successful sanitary ware. So they also started focusing on product quality, building advanced technology, state-of-the-art manufacturing plant. All of this has been in the making since 1980. So eventually this was incorporated as Cera Sanitaryware in 1998, and in 2001 they officially launched it. So if you look at the history, there is a rich legacy in terms of expertise in this field for this founder, which is very, very critical and vital for a company to become successful and for a company to scale and become a multi-bag. So let's see the other history as well. So by 2002, he brought his first-hand experience of over 2.5 decades. So his rich legacy and heritage in this field helped him to come up with a product that is solid, that can compete with the best in the market. So his son also joined this firm in 2004 and he played a very, very critical role in the growth of Cera, the brand. We'll talk about second generation entrepreneurs and how they scale companies in another video in detail. So by 2012, what happened was the company started doing well and it started to scale from the 2010s onwards. But what happened in 2012 was his son passed away. He was star performer. Sarah received Asia's most promising brand award for the year 2012-13. But still, what happened was there was a vacuum there because Vidush was supposed to take charge of the company after Vikram Somani. There was a small slump in the share price. There were so many questions, but eventually Vikram Somani came back and took over and continued to lead the company for another decade. So, so the first thing is expertise. So Vikram Somani is a first generation entrepreneur. He's been running this business since 1980. Second thing is moral and ethics. So you should check everywhere to see if there are any fraudulent activities that have been done by this management. Just a simple search on the websites, on Google, on GenAI sites could tell you if there are any fraudulent activities that have been carried out by them. You can check their qualification, family background, their work experience, what kind of work they have done to be successful in running this company. So overall, this is a professionally run company with a strong leadership team that can be trusted upon. So what is the next thing that we have to look at? Does promoter have skin in the game? So how much stake does he hold? does he have everything in this basket? For example, there may be companies where founders may be running private firms. So related party transaction is something that is very, 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 very critical. So in any company, if there are complex related party transactions, it is a big, big red flag. So some companies have a listed company where they will not share proper revenues and profits. Instead, whatever money is available, it will be sent to their private firms through related party transactions. They might pledge their equity holding and use that money for some other purpose, or they might use it for their personal gains. And in some cases, promoters pledge their stake as well. And in other cases, the promoter holding may be very, very less. For example, there may be companies where you will have founders holding just 10% stake. So they do not have a lot of skin in the game. They do not have a lot of motivation to help the company to grow multifold because they themselves do not have a lot of rewards out of it. So promoter holding is something that is very, very critical. And in the same way, you have to ensure that the promoters have proper skin in the game and they do not have any other companies where their interest lies. So this is another thing where Cera is again successful because as of today they have a 54.1% equity in this company, which is very good, and everything is unpledged. So the previous point I mentioned, expertise and financial management skills. So Vikram Somani, as I said, he's been in this industry since 1980. So strong domain expertise, exceptional knowledge about the industry, how it is scaling, how it is expected to grow, how the products are expected by companies, customers. So he has first-hand experience of everything, which plays a very good role in a company becoming a multi-bag. So the other point is, does the management walk the talk? There are companies where founders will keep giving you a lot of yarn. They'll tell you, the worst part is behind us. We are going to grow 50%. We are going to go 100%. We'll grow 10x. So they'll keep coming up with a lot of unrealistic targets. They'll keep saying a lot of things, but nothing will happen in reality. So the one other thing that you have to check is, does the management walk the talk? They claim that they are expecting 30% growth. Is it somewhere close to it? They are saying that the growth is going to slow down. Is it something that is happening? So the promoters are expected to be shareholder friendly. They are expected to be a lot more ethical, a lot more transparent in terms of communication. And this is again something that will help you to make sure that the company has predictable stream of revenues. And whenever a company has a huge profit, what they do, they typically spend some part of that money in reinvesting for growth. So this is an asset light, high quality business with a high ROE, because of which you'll not see a lot of money that's needed to be reinvested again and again. Though they spend a good amount of money in reinvestment, there is a lot of cash left. So typically there are two options when you have a lot of cash in your wallet as a company in your balance sheet. So they share some part of the profit as a dividend. So if you look at the last 10 years, they've been paying very good dividend. So out of the total profits, this is the dividend payout ratio, which is very, very good for a company like Cera. So the last few years, it clearly shows that growth is saturated. They have a lot of cash. They could not reinvest more in growth. So they are spending that money and giving it back to shareholders as dividend, which is a very good thing. And what is the next thing? So one is reinvesting your cash in business. The second thing is paying them back as dividend. Third thing is share buyback, which will again increase the value of your stocks. So you'll buy back some shares, so the number of shares will go down. So whenever buyback happens, the value of the share will keep going up because the number of shares will be down. So your market cap divided by number of shares will be less. So your share price will keep going up. So they recently announced a 130 crore share buyback, which is at a 34% premium through a tender offer, which was announced 3 months back, which is again something that is very, very shareholder friendly. The other thing that we have to look at is what kind of independent directors are there, who are there. Are they just mouthpiece to the founder, or do they have proper pedigree? And the other thing is salary. So there are some company. There is a very, very popular media company that also holds an IPL team. So in that company, there is always a criticism that the founders take a lot of profits back as salary, huge salary. So if you look at Cera, the salary is just 3.7 percentage of the total profit, which is reasonable. So typically up to 5 percentage of profit if a company's founder is taking back a salary, it is an acceptable level. Beyond that, if there are companies where they may take 30%, 40%, which is huge, it means that they are focused only on themselves and not on the shareholders. That is again another red flag. So these are the most important traits when it comes to management when you are looking for long-term bets. So huge TAM is important, huge market size is important, high quality management with strong expertise is important. So you need a strong visionary and decisive leadership. They have to be ethical, they have to be transparent, they have to communicate properly. They should have solid experience and they should have a solid track record in execution as well. So with all these traits, a company like Cera has become a 100 bagger. There are so many other companies like this which can be picked up to become the next multi-baggers. So in our part 3 of the series, we'll see other important traits that help a company to become a multi-bagger. Thank you for watching. If you like this video, please like, share, and subscribe.